Hello, I'm Susan from CoVenture Tax Consulting. Today, I'm sharing insights from our 25 years of managing revenue audits and investigations. We have negotiated savings in the millions for our clients, and we have helped our clients to avoid publication and prosecution. Without further ado, here are 5 recommendations that we believe will substantially improve the outcome of your audit. Tip number 1. Hire a tax professional to handle all communication with revenue, including replying to the first letter. Tip number 2. Consider a tax expert with no skin in the game and with no interest in displacing your accountant. Tip 3. Have your tax expert reply to the revenue notification letter within the 14 days notification period. Tip 4. Change the date of the audit, no matter how prepared you think you are. And lastly, tip 5. Begin the preparation of a voluntary disclosure at the earliest opportunity. There are significant benefits to hiring an independent tax expert. At CoVenture Tax Consulting, we are not accountants. We are qualified and experienced tax lawyers. We work with accountants and implement all manner of tax advice for businesses, individuals, and families. The revenue commissioners have a strong preference for dealing with tax experts and audits. It makes their job easier and immediately signals that the case file will be well presented. This is an important factor, for example, when seeking additional time or extensions. It is extremely important to manage the initial contact with revenue and to limit the amount of direct face time between the revenue and you, the client. A tax expert is in a better position to provide polite but firm representation in this and subsequent discussions. Engaging a tax expert frees up your accountant to focus on the labor-intensive process of extracting the necessary information and carrying out any further analysis that is required. Large penalties, publication on the tax defaulters list, and prosecution are caused by mistakes at the beginning of a revenue audit. You must understand the different stages of a revenue audit and your responsibilities at each one. No second chances are given by revenue for oversights as the audit progresses. Failing to provide deliverables on time will expose you to higher penalties, greater interest charges, publication on the tax defaulters list, and prosecution. No matter how prepared you think you are, your number one objective on receiving a revenue audit notification should be to change the date. The legal timeframe for requesting a change of date is 14 days beginning on the date of issue of the audit notification letter. The biggest mistake you can make is to ignore the notification letter or to go it alone and start informal discussions with the inspector. These actions provide leverage to revenue in the audit. At the first revenue meeting, you will be invited to make a voluntary disclosure. The quality of the disclosure made, and assuming it meets the legal standard, will determine the scale of penalties, whether or not your case is published, and the risk of prosecution. A voluntary disclosure must include all significant tax issues and a proposal for payment of taxes and interest identified. It goes without saying that full analysis by us and consideration of the relevant tax issues by you requires time. Preparing for a company audit will involve a general review of trading activities, access to the 12.5% rate of corporation tax, property and IP holdings, financing arrangements, and international transactions. Revenue will focus on share disposals, transfers of value, and big-ticket items. For this reason, early attention should be given to high-risk transactions that could be attacked by revenue under anti-avoidance legislation. Achieving the best outcome in an audit requires swift action, identification of all tax issues for the voluntary disclosure, and an understanding of how to present relevant matters to revenue at the initial meeting. Usually, these steps must be carried out in a very short period of time, often less than 8 to 10 weeks. The average audit timeframe is 9 months with significant engagement with revenue after the initial meeting. As revenue may set aside any disclosure made upon finding any new issues, it is critical to engage representation at the earliest opportunity. Professional representation will enable you to navigate an audit, negotiate with revenue, and secure the best financial settlement that can be achieved in the circumstances. And there you have it. These are our tips for handling a revenue audit. The bottom line is that you should never go it alone. And you should never trust your accountant to handle a large audit alone. The audit process is complex and there is no room for error. If you would like to speak with us about an audit, investigation, or revenue inquiry, you can contact our Dublin office at 6978012 or send an email to advice@coventure.ie.